Welcome to the Daily Brief, where I'll go over the highlights in the market for Wednesday, October 6th, and then we'll go over briefly the high points of things for Thursday, October 6th. And after having a pretty negative open, the market staged a pretty impressive recovery. We were down 1.8% at one time with the S&P 500, only to bounce back up. We got above the pivot. We got above the unchanged level. We actually went positive as we were getting closer to the close. We finished off of the highs and down slightly on the day. But given all the headwinds that the market has right now, to stage this kind of a rebound was pretty impressive. We'll just have to see now, can it continue? So let's talk about what happened. Right at the open, we had a gap lower open down to S1 at 37.48, and selling continued below that, but we never got down to S2. That's because in Tuesday's session, the pivot points, we had such a big move that day, and the pivot points for Wednesday are calculated based on what happened on Tuesday. So that's why some of the points were pretty far apart from each other. And we didn't even get down to S2 at 37.04. As the day went on, prices ended up finding a base and then rebounding out of that. We got up to the pivot at 37.70. We continued climbing. We went positive briefly, but going into the close, we closed off of the high and slightly negative. We were down 0.2% on volume, and the average are right about on top of each other right now. Technicals are still negative overall. We have some oversold conditions still that haven't been worked off yet. We have some of our shorter term indicators are still giving us overbought conditions that haven't really worked off yet because of the inflation and interest rates. That's the stock market focus, and it has been, and it will continue to be that for the foreseeable future. We have all these other things going on too, things going on in Russia, between Russia, Ukraine, Russia, and the rest of the world. Things seem to have settled down a bit in the UK, at least for the time being. And then any Fed speak that we get here. So what are some comments? We did see an impressive rebound after we had a down open all the way down to 1.8%. And then the market's picking up with this scenario now, and I'm seeing it more and more, that inflation is topped and so will the Fed. That's my own little statement right there. Thinking that the Fed is going to not raise interest rates as much, or they're going to stop, or at some point they're going to start lowering interest rates. We've had no confirmation that I've been able to find from the Fed that they intend to do this. This would be the fifth time in 2022 that the market has developed this scenario only to have it dashed at some point. So we just, I guess if you keep trying, eventually you might be right, but we've got so many headwinds right now, and the Fed has been clear and consistent with what they're going to do as far as staying ahead of inflation. They're going to keep interest rates up. They're going to keep raising interest rates. And once they get them up there, they're going to keep them there for a while. And that's the consistent story that we have been hearing, no matter what the market comes up with. Now, some of you may disagree with that because it's really, the Fed is supposed to follow what the market tells it to do. But we're seeing a real reversal right now where the Fed is telling the markets what will happen. Now, at some point, they'll probably come back together. But for right now, it's the market leading, it's the Fed leading the market currently. Then oil is starting to go back up because OPEC came out, which was just a couple years ago, really not relevant. Well, now they're more relevant. They're going to be limiting their supply starting in November, so that's pushing oil prices back up. We still have the 30 to the 5, the 10 to the 2, the 10 to the 5. The yield curves that I watch still remain inverted. Sentiment is still fearful, but not extreme fearful currently. And if this bounce continues, and I finally spelled it the right way here, FOMO, the fear of missing out. Folks who make their decisions after they see what's already happening, if we continue to go up from here, they may start to jump in. And a lot of times they are late to the party, if not when the party's already ended. So we just want to be aware of that. We had the weekly MBA mortgage application index. The last time we got this report, it was down 3.7%. This time it was down 14.2%. So yeah, it's really going down. The ADP Employment Change, this usually comes out a few days before the employment situation report on Friday. And they think that there are 208,000 new jobs, which is greater than the 198,000 that they thought. But these numbers and the numbers that we're going to get on Friday can be way off of each other. They use a whole different methodology to calculate it. Then the U.S. trade deficit narrowed to 67.4 billion. They expected it to be at 67.9 billion, so a little bit less than expected. The last time we had this, it was at 70.5 billion. The IHS Market Services PMI, it came in at 49.3. The last time we got it was at 49.2. Anytime we're under 50 is showing a contraction in the economy. The big one was this one, the ISM non-manufacturing. It fell to 56.7, but they expected it to be down more than it was. And that might have provided some of the catalyst for the early morning selling, because they expected it to be down 56. It came in at 56.7. The last time we got this report, it was at 56.9. Our trend is negative and it's weakening, but it hasn't quite crossed under the moving average yet. And our bias, I'm keeping it mixed right now because, yeah, we had a down day, but it wasn't that big of a down day. We had positive up days, but there's still a lot of weakness under the surface that isn't starting to produce a lot of confidence in what I'm seeing right now. And then as far as momentum, I'm keeping that mixed for right now as well. So what's our outlook? The technicals, they're negative, but they're showing some improvement. We're still oversold with some of our indicators, and some of them are still overbought. Can the rebound resume, or is the decline going to resume, or are we going to chop sideways? We just have jobless claims coming out, and then the whole list of geopolitical events. Russia, Ukraine, Russia by itself, things going on in the UK, any Fed speak that may come out, but the market is still fixated on this whole interest rates and inflation scenario. So we can't really discount the down scenario right now because of all the headwinds that we have. The technicals are still negative overall. We have not switched to positive. We're showing some improvement, but we haven't switched. We have some overbought and some oversold indicators still. Our intermediate and long-term indicators are showing a little bit of an improvement, but not all that much yet. We can't really go with the up scenario because things haven't really switched over positive. If you watch the full length video, we're finally getting close to the 20 period moving average again, but we have a lot of overhead resistance. So it's really hard to go with the up scenario, and we're seeing very little confirmation of that at this point. Sideways, if you're more aggressive with the ADX when it drops below the moving average, that's when you might suggest that we're in more of a sideways trend because the ADX may be coming down. But for right now, it's still above 20. So if you're more conservative with that indicator, you might want to wait for more confirmation. So our conclusion, and I don't know why I called it the S&P 600 here. That's the small caps. These are the mid caps. I get them all confused. We are rebounding from being oversold and improving if prices advance. We could lose this pretty quick, but so far it's holding up. Short term, we're negative, but bouncing from being oversold with some overbought indications. Intermediate term, we're showing some improvement. Long term, we're showing some improvement as well there. So thank you. Please feel free to check out the full length video, and I will look to prepare the next video before the next session.